Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Brian Frank, Chief Investment Officer of Frank Capital, to discuss there are still good buys outside of energy. You just need to focus on valuation, balance sheet, and cyclicality. Brian, it's great to have you with us. And let's first start with where we are in the market right now. Most U.S. equities are not pricing in a recession in 2023. What indicators are pointing to that?
Well, we think the number one indicator would be the 3-month Treasury minus the 10-month Treasury. That's the economist's favorite indicator. It's a lot of market participants' favorite indicator, and it is flashing red. It's negative right now. The 3-month is yielding more than the 10-year, so people are pretty upset about growth or pretty worried about it. And this indicator has actually never had a false positive. So every single time it's been negative in the past, we have gone into recession and pretty quickly after that.
Yeah, and if we take a look at your first chart here, this is exactly what you're referencing here in terms of the indicator between that spread there. So let's take a look at that, and you can show us exactly what is pointing to, what you're looking at over there.
Sure. Do you want me to screen share it? Sorry.
Yeah, no, we have it for you. It's up there.
Oh, you have it.
2023. Yep.
Okay, yeah. The last thing you want on your chart is a bunch of red circles there. But those red circles show every single time this indicator's gone negative, you can see the gray highlight there is when the US entered recession after that. So it's wild to me that equities aren't pricing in a recession for next year. You got some banks starting to make the call. You have some estimates just starting to creep down, but look at the history of recessions and you have double-digit declines in earnings, and that's just not being priced in the equity market right now. So we're calling it a golden age for value. You want to get out of some of these growth stocks because growth is disappearing, and there are still some good valuations that you can pick up and hopefully weather the storm that's coming in 2023.
So then, Brian, what's the most attractive sector out there?
We definitely still think it's energy. Energy's had a big run this year. But the political winds in a weird way are at your back in energy because they've made it so hard to build refineries and drill new oil. In a way, it's like a moat that Warren Buffett calls, and maybe that's why he's buying some energy stocks too. So these energy stocks have run up this year, but they're extremely shareholder friendly. They've gotten a lot more disciplined on CapEx, and there's just not a lot of oil out there. So even if there is demand destruction in 2023, these energy stocks have actually priced that in. They're probably the one sector that's priced in for a recession in 2023 when everything else just isn't quite there yet.
What if we look outside of energy?
If we look outside of energy, we love more of like the consumer staples type stocks. So things that people just have to buy, your Coca-Colas, those types of stocks, because a lot of them have high dividends. They have strong balance sheets. As interest rates go up here, you're going to see a lot of financial distress next year in a recession. But if you have a strong balance sheet and a steady cash flow, you can weather the storm.
Yeah. And Brian, when we think about that, it seems as if 2022, and it sounds like certainly going to 2023, the active management certainly is going to trump passive.
Yeah, at the Frank Value Fund here, we've been waiting for this for a long time. We've had the ice age of value in the last few years, but now we think it's similar to 1999. You had all these high-flying stocks, you had a great economy, and then during the recession, those stocks underperformed and value actually outperformed, and some value stocks even went up while the market was down about 40% in 2001 and 2002. So we think it's the same setup. So in the Frank Value Fund, we have those energy stocks, we have these consumer staple stocks, we have things that are paying dividends, and we're ready for it. We've been waiting a long time.
All right. And Brian, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.